Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for December 31st, 2023. This is obviously going to be the last video of 2023. And you know what? I'm so excited about next year. Next year, I think, is going to be the most explosive market as far as volatility goes. And it's going to be really, really great for us as traders to be in the markets. And I'm glad and I'm happy to do it with you. Now, what you're also going to notice on the screen is our New Year offer. Usually we don't do this for a couple weeks. And then we, once everybody gets back from holiday, we have our New Year's offer where you can get the most discounted prices you're going to get all year for Forex Analytics. If you've been watching these long enough, these videos for the last 5, 6, 7 years, you'll know that we don't do pricing discounts all that often, but we're doing it at the very beginning of the year. Right now, it is live and it goes on until next weekend. So take advantage of these prices right now, because we got a lot in store for you as Forex Analytics, as a company. We have a lot in store for you this year, so be on the lookout. So we wanted to get this out of the way and get you guys into the markets because it's going to be an exciting week. Matter of fact, I think this week is going to be a great week to be trading. So I want to make sure before I even get started with kind of what I'm looking for going into this next year, I do also want to mention Grega Horvat. At the end of this video, he's going to give an Elliot Wave perspective of the markets. Remember, this video is chaptered, so you can actually go through the chapters and see what you want to see. You can go to my recommendations of this next week or what I'm looking at, my trade setups. You can get to Grega's video that way. You can skip forward if you want, but we're going to go through so much important stuff. You're not going to want to do that. So let's talk about this next year, and I'm gonna stay on video for a second, and I want to talk to you about as we go into 2024, kind of what we're looking at and what I'm thinking. So some of the big themes this next year is going to be, rate cuts here in the U.S. and not only in the U.S. but globally, or are we going to be higher for longer? The market is what a lot of people say price to perfection, but it's the market's pricing in 6 rate cuts for 2024. Is the market right? Might be. But you also have to think about, if the market is right in pricing all these rate cuts, something bad has probably happened to the economy. And so if something bad is happening to the economy where there's a slowdown enough, or inflation's dropped but growth really has to start slowing, jobs market has to really tumble, how are markets going to react if that is the case? Now, I just did a video with Jim Welsh, and he talked about Fed funds futures pricing, and he showed like a really interesting graph on how wrong the market is all the time. And considering how wrong the market was this year in thinking that we shifted from higher to longer to all of these rate cuts, this next year is going to be quite volatile. So that's going to be one of the big themes. And then another big theme of 2024 is going to be, are we going to have an economic slowdown, or are we going to just have like a soft landing, or are we going to have a recession? The markets were really surprised by the ongoing strength of pretty much the U.S. economy. The U.S. economy and exceptionalism in 2024 was a big theme. This year, because the market is thinking that there's going to be, no landing, we're going to, the markets are going to continue to rally, and the U.S. economy is going to continue to strengthen. I think the markets might end up being wrong this year, because the market, myself included, expected economic slowdown into 2023. But really, those lags, I think, are taking place, and we're going to start to see an economic slowdown after maybe the first quarter of this next year, or maybe even the second half of 2024. But I think the slowdown is going to be a little bit more prominent. And, it's going to be interesting to come back to this video 1 year later and seeing what happens. One of the other big themes of this next year are elections. Obviously, we have a U.S. election. But one of the other big elections, and The Economist did a video on this, and I thought it was really well done. As many of you know, China is trying to mobilize militarily for an invasion. Xi Jinping said that he wants to be prepared by 2027. Now, Taiwan has an election. The current government really opposes, Chinese rule. Then there's two other parties that really want warmer, relations with China. And so what happens in the Taiwanese election this year is probably going to matter a lot between, if China is going to invade, in the years ahead, and then also taking into account the U.S. election. It looks like, unfortunately, it's going to end up being President Biden, President Trump. I'm not gonna sit here and have a political discussion with you all, but between those two potential future presidents for this next term, the how China is approached and with Taiwan could be two totally different things. So the U.S. election is obviously going to be very contentious and is going to create a lot of volatility. And for those of you that have been off Twitter or X, whatever you want to call it, over the last several years, you might want to get your Twitter accounts back up and running going into the end of this year of 2024. I'm just saying. All right, another big theme this year, in my opinion, is going to be the yen and the BOJ. It's the last central bank standing that is going to be looking to raise rates, where every other country is, looking to cut rates, or every other region is cutting rates, starting with, emerging markets, but going all the way into US and Europe. The market's pricing in, obviously, rate cuts, where in Japan, they're looking for rates to be normalized. Now, the reason why this matters is because the consensus trade is to buy yen. I am a big yen bull. I am not a yen bull at current levels. I want to be a buyer of yen, but I think the market is so strong in its consensus that there might be room, and I'm hoping there is, fingers crossed, I'm hoping we see some yen weakness before we see some yen strength. And I'll go over those charts with you as we go through today. So without further ado, let's get into what's happening this next week. And let's get into some of the charts that I'm looking at. But those are going to be the predominant overarching themes to me. And obviously, we have to be aware that there's always things that can jump out at us. Trying to predict what's going to happen in a year from now, it's very tough, and it's tough for anybody to do. But I think those are the big themes that we're going to be looking at. And obviously, there's going to be things that percolate throughout the course of the year that's going to grab our attention. But the good news is we broadcast every single day live, and it's free for any of you to listen into. You can just go to our website, and you can go to where it says webinars. Listen to the Flow Show every day with Ryan and with K-Man. That's during the European hours. Then you can listen to the Face Show, which is another free show that you can register for. You can register for the link down in the description. And you can hear myself and the rest of the team talk about what we're looking at every single day. And then obviously the week ahead videos here will keep you up to date as well. So, and matter of fact, if you haven't subscribed to this video or to this channel, make sure you subscribe to the channel. It's free to do so. Click the bell icon up in the the little bell icon if you're on YouTube. This way you get notified every time we have a recording that comes out, and you'll be the first one to hear these week ahead videos. So, do it. It's free to do it. All right, let's get into the markets. So Monday obviously is New Year's Day, but Tuesday we're going to have Eurozone and UK and Canadian and US PMIs. Now, I'm going to start off with the euro dollar, and the euro surpassed what I thought it was going to do. This week, obviously this last week or the last 2 weeks, we've seen dollar weakness come into the market. We've seen equity markets rally. And so we extended our gains in the euro as, the dollar got pulverized as a result of, end of year flows. Equity markets going higher. Now, if you've been listening daily to the show, you knew that I was really looking at this 111 level. And if you were in our Forex analytics chat rooms on December 27th, you would have known that I was shorting the euro at 111. So I have been establishing a euro dollar short. I actually plan on getting it out of the euro short just as soon as the markets open on Sunday. But I still really want to focus on the euro short. And I'll tell you why. First of all, you got manufacturing data out of the Eurozone this week. And because it's coming out of the Eurozone this week, I think that manufacturing is going to still stay relatively weak. But as a result, like I said, I think the markets are really priced, to perfection here. So that data, I think, is going to be influential on Monday. Now, remember, it's not just Eurozone data. It's UK data, Canadian PMIs, and then US PMIs as well. But take a really good look at the euro dollar and notice where we rejected. We rejected at the 78% retracement. You know what's more glaring here on this chart? And let me delete some of the stuff that we don't use. Now, these are the week ahead charts that I use only here. Well, at least the currency ones I only use here on this show. So I update it every single week just with you guys and gals right now. Let me delete. Whoops, I didn't want to delete that one. Let me delete this trend line here. What's most glaring to me is we hit a new high, but relative strength didn't. Notice how relative strength was divergent. So as a result, if we're going to play the euro to the short side, which I am, okay, and let me explain to you guys the reason why I'm playing the dollar on the long side. Generally speaking, overarching idea here. The market is pricing in 6 rate cuts in the U.S. this year. I think that's way, way too aggressive. Is the Fed going to cut rates sometime this year? I believe so. Do I believe it'll be, maybe a couple of times? Yeah, that's where I believe. What does that mean? Well, that means equity markets will probably weaken, and that also means the dollar is probably going to strengthen. So if you want my overarching thing for 2024, at least the first half of 2024, I think the dollar is going to strengthen. You want to play the euro to the short side, that means. So even though I'm going to cover my short, probably to start the week, but what I am looking to do is I'm looking to sell any rally, and as long as we stay below the 111 level, I am going to be on the short side of the euro. So just kind of giving you guys a heads up regarding that. Now, the thing is if we slump much below this level right here, which would be around 110, we start getting below 110, and I'm not short, I might have to chase it to the downside. That's the other, issue that I see with the euro dollar, moving forward. But I do want to sell rallies in the euro, and that's what's happening on Tuesday. Now on Wednesday, we have ISM manufacturing, we have JOLTS data, and we have the FOMC minutes. Now, this is a jobs report week. So obviously, the dollar is going to be in focus this week, as it should. And I don't believe the jobs market is ready to roll over just yet. So therefore, if the data comes in strong, you're going to see the response out of the dollar index. Let me take you over to the dollar index really quick. And let's go over to the Dixie. Now, the dollar index is one of those charts that I do update throughout the course of the week on our daily shows, because it's a universal index. I can't just use it here and not use it on my normal daily shows, on the face shows every day. And in Forex analytics, I even use this dollar index when I'm updating the basic technical analysis charts throughout the course of the week. So with that being said, looking at the dollar index, we did complete a triangle pattern to the downside. We got really close to the 88% retracement, but like the euro, you can see that divergent relative strength, right? As prices have been moving down. So as a result, I think that the dollar index is primed for a rally. Now, I do, and I'm not ignorant to the fact that the cup and handle pattern has not completed, but it's played out quite a bit in what could be, more of a range-bound environment for the dollar index. And not all times do chart patterns complete. And, looking at this bigger, longer-term range over the course of the last year, and we're down towards the lower end of the range, I think that the risk-reward favors those playing the range bottom. So just like the euro, I'm looking to sell rallies. I'm looking to buy dips in the dollar index as well. That is because I think the U.S. economic data may show a little bit of weakness, but not as weak as the market is looking for. Not yet. Thursday, we have German CPI, Eurozone services PMIs are coming out all through Thursday. So obviously the euro is going to, continue to be in focus. Let me delete this here with the euro yen. Now, one of the risks I think with the euro, especially with like the euro yen, is the euro yen longer term made a lower high. You can see this. Let me zoom out on this weekly chart here. You can see how we made a lower high. But one of the other things about the euro yen is we're getting really close to the 200 DMA. So watch these levels in the euro yen. I think that's going to be really important support. It's not really my focal point right now, but I wanted to point that out because I think that the euro yen is really close to support, and especially with all the eurozone data coming out this week, it's worth noting. On Thursday, we also have ADP, private employment data, and unemployment claims. Now, I want to talk a little bit about unemployment claims really fast because in the U.S., many people are paying attention to continuing claims. Now, I'm going to show you a chart of this is a 1 year, I believe it's 1 year chart. Oh, there it is, the 1 year chart of continuing claims here in the U.S. Now, look at what's happened over the course of the last, in the fall, the last several months. This is why you hear people talking about, you have these weekly unemployment claims, but people are watching continuing claims. That's because they've risen quite aggressively over the last several months. And eventually this could lead to the jobs data really rolling over. That's why I think it's really important that we continue to watch these continuing claims, because that means that people are out looking for jobs. They're not finding the jobs that they're looking for. So if you get laid off, you lose your job, you are searching for a job, you're not finding them, and those continuing claims are continuing. So anyway, worth noting going into Thursday. Now on Friday, we have Eurozone CPI, we have U.S. jobs data, and Canadian jobs data. Now I do want to talk about the dollar CAD, and the dollar CAD it is. Let me just say this because I'll come back to it. The dollar CAD is one of my setups for this week. There, I said it. Okay. Now, looking at the dollar CAD, you'll notice that we found support at the 88% retracement. You can see it right there. All right. What also came very close to happening is an equal leg completion. Oops. Here. Okay. So you got an equal leg completion. Did I just say it almost did? It did. Sorry, I meant to say it did. I misspoke. It completed an equal leg move. And so with that, and I want you to think about this really quick. I'm more of a Canadian currency bear this year. And let me tell you the reason why. And if you listen to some of our interviews that Dale Pinkert does on the Face shows, you probably hear from a lot of Canadians, and they'll tell you that because of these high rates and mortgage refinances, the Canadian economy this year is probably going to start to slow quite dramatically. I believe the global economy is going to slow this year, but the U.S., you're going to see that U.S. exceptionalism where, if I'm a homeowner, which I am, but I'm a homeowner and I have a very low interest rate, I have a 30-year fixed mortgage. I don't have to refinance. I just kind of sit where I'm at, and as long as I'm not forced to move, my mortgage is not increasing. If I'm European, Australian, Canadian, certain parts of Europe, obviously, and I have to refinance my mortgage because I only have a 3-year or 5-year, mortgage. That means I have more of a variable mortgage. So as I refinance, my mortgage might be, instead of $3,000 or 3,000 euros, 3,000 Canadian dollars, whatever it is, a month, it's going to end up being like 3,800 or 4,000, because interest rates have obviously gone up since the last time I financed my home. If that's the case, that chews away at my expendable income, and that's going to eventually weigh on a lot of economies. Canada is no exception to this. And that's why I think the dollar Canadian down at these levels it's going to be a value trade, for us. Now, the reason why this is such a big setup going into this next week is because we do have Canadian jobs. So, keep that in mind. The Canadian jobs market, it continues to be very strong. Even this month, the market is expecting 13,000 jobs to be created. If Canada's job market stays strong and the U.S. jobs market, let's just say, weakens a little bit, because we're expected to come down to 170,000 jobs from 100. What we did, like 200,000 jobs last month. We're expected to come down. Let's say the U.S. comes down a little bit more aggressively, but Canada stays strong. The dollar Canadian might make another dip back down towards 131, and if we can get an opportunity to buy the dollar Canadian closer to this 130, 131, 50 level, I'd be a buyer down there if possible. Now the flip side is, you could get weak Canadian data and strong U.S. data, and next thing you know, the dollar Canadian is flying back up towards 134. That is entirely possible. But really, one of my setups for next week is try to buy a dip in the dollar Canadian on Friday, because I believe that the Canadian and U.S. data is going to, hopefully, I say hopefully because obviously I don't know. Your guess is just as good as mine. I'm hoping that we get a favorable situation where we get a quick dip in the dollar Canadian to be able to be bought, more for a swing to intermediate trade, going long. Anyway, I think that's going to be a big deal going into this next week and on Friday. So continuing on, let me make sure I do this for you guys. Continuing on, let's talk a little bit about, there's one other thing on Friday that's happening. We have FOMC Barkin speaking. Now, the thing, I met with Jim Welsh of Macro Tides, as I do on Fridays. He put up this chart really quick, and I'm going to just show it to you because I think it's really important. This shows you who's a voter and who was a voter in 2023 and who's a voter in 2024. Barkin is a voter, and it's going to be Friday. As of this year, wasn't a voter in 2023. It's going to be a voter. I know it's still 2023 technically because I'm recording, but you know what I'm saying. Barkin's going to be a voter in 2024. So it's going to be really important to understand that, because we have to start listening to these speeches from the new voting members that are coming in this year. So that's going to be as of Friday, late morning. Okay. Now I want to talk about other markets, because it's not just currencies. Obviously, I want to talk a little bit about what's happening in equities. So let's go ahead and view what's happening in the broad markets. Okay, so we're going to start off with the S&P. Now, what you're going to notice is the S&P got a little bit too excited going into the end of the year. A lot of end of year flows. People are just trying to play catch up. Putting money to work. And you can see on Friday we saw a little bit of profit taking. Now notice that relative strength is very divergent. We're only, from right now, we are about, what is that, 50 points away, 60 points away from all-time highs, 80, about 80. Yeah, about 80 points from all-time highs. Now, this is going to be one of my setups going into this next week, and I'll talk a little bit more about it as we get to it. But let's just put it this way. I'm looking to sell the S&P up here. Now, I want to go, before I even go into any of that, let's go take a look at the NASDAQ 100, because the NASDAQ 100 did hit all-time highs. We still have a bull flag that could continue to play out, but we also have the risk here is if we start getting back below 16,600 right here, the risk is that we end up getting a false breakout. Now, notice how we're trying to work off overbought conditions, and we got about as overbought on the daily RSI as we can get, or as we tend to get before we see reversals. So, I think the NASDAQ 100 is at risk of a potential false breakout up here. And again, I think the markets are priced to perfection. The big theme that you're going to hear from me, especially over the next few months, is going to be The market is expecting so many rate cuts, and we're probably not going to get it. And so when the market has to reprice that, that's when you're going to start to see equities really come down. So with that being said, be careful of the NASDAQ up here. Take a look at the Dow. The Dow just hit the 161% extension as the Dow hit all-time highs. So now this is pretty clear to me, is a break back below 37,000 is a false breakout in the Dow. Now, again, new highs. This is very common that we've seen in these markets. New highs, relative strength is divergent. So I think the risks are that we start to see a pullback early on in January. Okay. So anyway, there's the S&P, NASDAQ, Dow. Everybody's focused on the Russell 2000, and everybody thinks that the S&P is going to. And this, I say everybody because when I say everybody, a lot of analysts that I listen to, the majority of them are very bullish. The mid-tier stocks, like the Russell 2000 mid-cap stocks, and they're not bullish NASDAQ. Well, I'll tell you that the Russell has been underperforming. And if the economy slows, okay, which I think it will in 2024, if it does, the market that's been underperforming, which would be the Russell 2000, is going to be probably the market that gets hit the worst. Because what doesn't happen when the economy starts to slow, you shoot everything. You shoot everything and you ask questions later. And the ones that are going to go down first are the ones that are underperforming. When the economy is doing well, you get that a lot of reversion to the mean type of trades. You get a lot of indexes playing catch up, like the Russell 2000 was playing catch up. But if I'm right in this next year and the economy does slow markedly, you're going to see every index go down because everybody's going to sell everything, ask questions later, and buy dollars and possibly gold. So with that being said, even though a lot of people that I listen to expect the Russell 2000 to outperform, I expect the Russell 2000 to really continue to sell off. And if you look at the Russell and you just look at, we could barely even get above our 50% retracement longer term. Okay. So keep that in mind. Let's talk a little bit about precious metals. I'm really nervous about gold, though, generally speaking, because once again, we closed below 2070. Okay, 2070 was that triple top. We closed below there again. So let me just, I guess I'll grab that arrow again and I'll put it right there. Look at that long wick. That is ugly, right? And silver has been very much range bound, not going anywhere. Let's delete this. Okay, whoops, not that. Let's delete this little inverted head and shoulder patterns because it's pretty. You could argue it kind of played itself out. Anyway, silver's having a really difficult time moving anywhere. So if gold rolls over and we get back below 20, which I think we will, we get back below 2010 right here. Okay, I believe silver is at risk of probing, if not breaking, this triangle support here, especially after this little false breakout that you see right here, right there. Yep, that little false breakout right there. False breakouts tend to lead to eventually breakdown. So just keep that in mind as we move forward. All right. This is the point in the video where I'm going to talk about, some of my best setups, but I need to go back and review from 2 weeks ago, right? Because we didn't have a week ahead video 2 weeks ago because it was Christmas. And I hope you guys all had a great holiday, by the way. I forgot to mention that earlier. And, as a Christmas gift to me, could you give me a thumbs up? And the Forex Analytics team, if you think these videos are beneficial to you each and every week, and you find value in them, there's a couple things that you can do to say thank you. You can jump in the comments and say thank you. You can, which is free to do. Thumbs up, which is free. If you see us on social media, a retweet would always be appreciated. and, subscribe to the channel because that's free to do. And then hit the little bell icon so you get notified every time these videos come out. All right, enough about that. But I hope you did have a happy holiday season. So 2 weeks ago, I said stay long the S&P as long as unless we get below 45.30. So obviously, I don't think we have to talk too much about it. As far as the S&P goes, yeah, we just continue to rally the last 2 weeks. So nothing changed there. And by the way, 46. What did I? No, I said 46.45 was. I think, if I'm not mistaken, I have to go back and think about that. Was this? I think is probably this high that we were at, and yeah, we just continued higher. Okay. Dollar Mexican peso. I said another long opportunity as you approach 17. The thing about the dollar Mexican peso is I bought it and then we dropped at 16.97. I ended up getting out. I ended up getting out of the thing and just taking it off. Now the dollar Mexican peso is not on my radar just yet. I was really looking for a move down towards these levels. I took a small loss here trying to get long, but I still believe that the Mexican peso needs to be sold near these levels. Here's the way I look at it. If you bought the dollar Mexican peso, you closed your eyes and you open them back up like a month from now or 2 months from now, I think you're going to be happy you did so. But are there going to be better opportunities to be buying at better levels? Maybe. And with the carry costs that are associated with the dollar Mexican peso, you kind of got to be patient. So, depending on how stocks act this first week, I think we're going to see some profit taking, but it's not uncommon to see the first week people put money to work. You get stocks moving higher. Dollar Mexican peso might actually dip a little bit more. Pound yen, I was looking for a short below the 200 DMA. Guess what? We haven't dropped below the 200 DMA yet. Is it a potential short setup? It still is. But if you really wanted to play a good risk reward, you just play it on the long side here, because. Now, here's where we go into our setups of this week. Because for me, talking to you guys about the yen, I think the dollar yen is probably going to be my best trade, or our best trade of 2024, being short. But not necessarily short from here. I'm looking to be short from up here. So, in other words, what I'm looking for is a move higher, hopefully, higher in the dollar yen first before we all look to get short. The reason why it's a huge consensus trade, and, the BOJ, we have a BOJ meeting in January. If we find out that we're not that close to the BOJ taking action, that could be one of the reasons why the dollar yen moves higher. It's also maybe a higher move in yields, because I still think that the U.S. economy is still going to show signs of life in December and January. So therefore, we might see a rally first before we see a sell-off. But I am looking to sell dollar yen on a move up towards the high 140s. But that's not for this week. For this week, while we're above 140, I am looking for I'm looking to trade long into the non-farm payrolls, and if we get above the 200 DMA, that's where it turns bullish. Okay, but while we're above 140, I am still looking to play it on. I am looking to play the dollar yen on the long side this week. Okay, on this little false breakdown that you see here. Next setup of this week will be short the S&P. Now, like I said, I'm not sure where this week is, how we're going to play out the first couple of days of the week, but you're probably going to see some money try and get to work on Tuesday and Wednesday. But a move in the S&P below 4,700 right here, I'm looking to short risk, however you're going to want to play this. And then, obviously the next add on any short would be back below this 4620 breakout point. Okay. So there's, in my opinion, there's two ways to play this, because or two levels to play this, because the first break will be let's see if it can really pick up steam. And then below 4,600 is where you start to really pick up steam. So, you know, you don't want to be too aggressive initially, but if we, you know, eventually get below 4,600, that's when the momentum really starts. Okay. Last, and I already talked about it, is long dollar CAD. Yeah. So we completed an equal leg move. Any dip in the dollar CAD down to one. Whoops, I didn't mean to do that. Let me, down below 132 and maybe to 31, 50, 80 is going to be a great opportunity to be on the long side. Now, we might not get that opportunity. You might just have to end up being a buyer, you know, on a break higher and have to chase it higher. And I don't mind doing that either. But I am looking to play the dollar Canadian on the long side, preferably to buy a dip at the end of this next week. All right, now, as I said, we have our New Year's offer. Take advantage of it, guys, because if you want to be involved in one of the most active trading communities, this is the way to do it. You can talk to myself, you can talk to other team members and other traders that are like-minded, and you have analysis. You have views on Elliot waves on 30 different instruments, harmonic patterns. You have a mobile app. You get desktop notifications. You get mobile notifications whenever there's updates. There are updates on 30 different instruments throughout the course of the week, so many times throughout the course of the week. And you have this community of traders to talk to, myself included. Why not take advantage of this, and kick off the New Year's right? But the other way you can kick off the New Year's right is stand by, because Grega Horvat is going to give you an Elliot Wave view of the markets. So enjoy this. And I want to thank you for spending your time with me. I'll see you guys on the Face Show on Tuesday. Happy New Year.
Hello traders, hello everyone, and welcome to our week ahead video. This will be your first week ahead video for 2024. So wish you many success, a lot of good trades in this upcoming year. So in the first week of January, as you know, firstly, obviously there will be holidays, but then we have the FOMC meeting minutes on Wednesday, and also inflation figures from the Europe, and as well as manufacturing data from the European zone as well. And more importantly, probably will be the non-farm payrolls report. So clearly there will be some volatility around the US dollar on the markets, but I'm not really sure if FOMC minutes will give us any kind of a new details. Probably the most attention will be on the non-farm payrolls report. Okay, so now in this video I will walk you through some of my longer term charts of selected markets, because it's start of the new year. So normally during this time of the year I like to scan through how the markets unfolded through the 2023 and what I can anticipate maybe in going into 2024, at least in the first part of this year. So I will firstly begin with the US yields. So as you know, Fed has somehow tried to hint at that maybe they are done with the hiking rates, that there could be even there are even some bets that Fed is looking to cut some rates in 2024. So this is definitely something that speculators are watching, and that's why speculators have recently turned bearish on the US yields, because they think that the Fed is done. So we are seeing pretty nice reversal here to the downside on the US yields. Notice that we completed this 5-wave rise, and normally whenever we completed a 5-wave rise, what we can expect? Well, we can expect that market is in a corrective phase. Okay, so if you're familiar with the Elliot Wave principle, your advantage is that you know what are the substructure of these corrections. So it should be an ABC movement, and looking so far from the recent highs, that's only one leg to the downside that is already trying to break this wave 1, wave 4 impulsive trend line of this impulsive channel. So it looks like that's wave A. Wave B and Wave C are still missing. So it appears there's plenty of room for more weakness here on the US yields going in 2024. So I think if the US yields are now still in the first part of this deeper correction that should take place, then we can assume that dollar index will stay bearish, because keep in mind that US yields here made higher highs while the dollar index made lower high, and I have been talking about this a lot in 2023 update. So I think the dollar index will stay bearish. Of course, there can be some setbacks and corrective retracements, especially at the start of the new year, when new position adjustments could occur, and this could drive dollar in both directions. But generally, if we see any kind of a bounce on the US dollar, I think that this will be short-term lift. Also, what is very important to keep an eye on commodities, because we know that commodities definitely are the most important for inflation. So if commodity prices are coming to the downside, then forecasts for inflation could also be lower, and if that's the case, then US yields could come to the downside and dollar as well. So it's important to me for me to track commodities as well. Here I'm looking at Thomson Reuters commodity index, and you can see that here we had a pretty nice 5 waves movement to the upside, and now it looks like that we are in a corrective phase. Again, as I said earlier, corrections should be made by 3 waves. And so far, I don't see this as a completed correction. I think that was only first leg of a correction, maybe leading diagonal for wave A. And now you are in wave B range. So it could be a little bit tricky here in the first maybe month or two of 2024, but generally speaking, I would anticipate a break to the downside into wave C, into the third leg of this corrective retracement that should be deeper. Could take us even back to this former wave 4, which is normally the case. Whenever 5-wave movement is completed and a 3-wave correction is underway, you can see price retracement all the way back to this wave 4 termination point. So again, there is still plenty of room for more weakness, for lower commodities. And if that's really going to be the case, what that means is that actually US yields should stay bearish as well, because there will be speculation that inflation will be lower. Okay, so I think that even dollar index obviously will stay bearish and could continue to the downside, in my opinion, towards 96, 97 area. Also, another important market should be emerging markets. So now when rates in the US are coming to the downside, when there are forecasts that there can be some cuts in 2024, but maybe in some other countries that's not the case yet, well, the money can be flowing out of the US into some other countries, like developing countries as well. So looking at emerging markets, this could be very important. Here I have emerging markets at the top, and at the bottom I have dollar index. And looking at the longer term view, you can see that each time when emerging markets found the bottom, dollar index has seen a corrective retracement. And so far, based on the latest developments, I think that the emerging markets are forming a base here, and that we could see move to the upside towards the upper side of this very big triangular range. So here, notice this short-term outlook for the emerging markets. Pretty nice 5 waves up, followed by ABC corrective retracement, and it looks like that we are breaking to the upside, and we will see more gains here going into 2024. That's not up to date prices, but still we are trading a little bit higher, but definitely we'll be watching for much more upside here on the emerging market. So what means that for the US dollar? Well, here on the right I have dollar index inverted, overlaid with the emerging markets, and you can see that correlation is pretty tight. So dollar index should continue to weaken if the emerging markets will see further strength, which is definitely expected from the Elliot Wave principle, because we have a pretty nice 8-wave pattern. 5 waves up, 3-wave retracements puts bulls back in play. Okay, now when we have this in mind, the dollar could potentially see more weakness in 2024, I want to look at some correlations with other currencies. Well, here I'm looking back from at the top. Actually, we have the currency rates. Here we have the S&P in the middle, then we have the US yields below it, and at the bottom we have dollar index. And I'm looking here at the data going back from October of 2022, and the reason why I decided for this date is because back then dollar index has seen a major top. Okay, And since then, you can see that actually we are seeing Mexican peso doing very well, Swiss franc is behind it, then you have euro pound. And notice that Kiwi and Aussie and CAD are not doing that great if we compare the whole time cycle going back from October of 2022. But what's interesting is that since November of 2023, these correlations have slightly changed. And that's since Fed gave us enough of even more reasons why they could really be done with hiking rates. And you will see that from that red line from November of 23, actually the commodity currencies like Kiwi and Aussie are doing much better. So now when Fed has finally maybe defined that they are done with the rates, with higher rates, that they could potentially even look for cuts, what we are seeing is that US dollar has lost even more value and that finally commodity currencies are showing some strength. Now Aussie and Kiwi are looking very good since November. You can clearly see that they are now at the top of these correlations. So I think that Aussie could do very well. There was even RBI meeting minutes and the latest showed that they can be even looking for potential another 25 basis point increase. So it looks like that this Aussie strength could resume versus the US dollar, which should remain very weak if stocks will remain in uptrend while the US yields are turning to the downside. So I think that this shift now since November could continue also into 2024, where commodity currencies like Aussie and Kiwi could really do well. Now, looking at the dollar index wave count itself, firstly, here we will take a look on a higher degree picture. Notice that I'm looking actually at the basic technical analysis. I'm looking at the very big channel here going from 2008, which topped out at 2022, and it was a very similar channel compared to this one that goes back from 1995 to this 2001 highs. It appears like a very similar land, and notice that also here market topped at the upper side of the channel, then we have seen a reversal lower. So now we are also reversing lower, but what's good about this current interpretation is that we are still not seeing the retest of the lower side of the channel, because if I think that market has topped out at the upper side of the channel and that maybe this channel will still stay in play, well, firstly we still have to see a retest of the lower side of the channel. So this brings potential forecast of the price around 96, as I said earlier, to 97. So I think that even if this upward channel will stay in play for dollar index looking longer term charts, there is still room for 96, 97 to be seen on dollar index. And then we will see if the market will form the breakdown or will price resume back to the upside. I don't want to forecast the potential breakouts because I don't think that makes sense, because we are not even at that point yet. And now if we take a look also maybe on the Elliot Wave principle itself on the dollar index, you can clearly see that from that September-October 2022 highs, there was a very nice 5-wave movement to the downside. So that was an impulse followed by 3 waves move to a new low, which was only temporary reaction. It was wave B. And then we have seen move to a new high above wave A, also or very temporary. This is a very tricky price action known as irregular flat formation based on the Elliot Wave principle, and we have been tracking this one very closely, and we also said that this up to 105, 106, even to 108, this whole area should represent a very important resistance for 2023 on dollar index. And so far we have seen a very nice rollover here, which clearly looks like an impulse. So I think that more weakness here can be seen on dollar index, and after any kind of a bounce that can occur maybe in January, I think that more downside here should be seen after this rally. So any kind of rally on dollar index, I think could be opportunity to catch some very nice supports on other currencies. Okay, as I said, maybe Aussie like Kiwi could be very well. Now also let's take a look on the S&P 500. Now on the S&P 500, I am more conservative here. I'm not very bullish, but still I'm expecting more upside here within wave B as part of a potential irregular correction here in higher degree wave 4. So what is very important, at least for me on the smaller time frame, looking at the daily here, is that even if I I'm looking at potential limited upside. I still think there is room for 5,200, 5,300 area, okay? So it's very good to be bullish even if you are more patient here and more careful with any kind of extreme bullish calls. I want to rather focus on minimum targets, okay? So even with this potential limited upside, I still think that there's plenty of room to make money on the upside. So if I'm looking here for a wave B corrective rise, well, wave B corrective rise, then this leg should either be made by 3 waves or 7 swings. So because this first leg here from that low unfolded in 3 waves, and then we have seen in this overlap, well, I think that it's wave X now that connects the first correction with the second one that is now in progress. So these second corrections should also be made by minimum 3 waves. So I'm looking this for to be wave A that is now trading around these all-time highs. Wave B pullback will be expected, and then watch out for more upside into wave C. So I will be looking for more gains in going into 2024. Also, if we compare the first part of correction here, W, with the second part that is now underway, that was 189 days. So if we project from end of a wave X, we get this similar number here going into summer of 2024. So there's plenty of time for this recovery to resume. So of course, there will be some kind of a pullbacks on the way up as well. Keep in mind that Wix is now trading at some interesting levels here, so maybe at the start of the new year we could see some volatility, as I said earlier, because of portfolio position adjustments. We could see some kind of a retracements, and ideally if we'll see some bounce here on Wix, we could see potential deeper pullback here on the S&P 500, which is also maybe expected based on this seasonality chart. Now, seasonality for January, as you can see here, okay, shows potential pullback here, going firstly a rise in the start of January and then a pullback. So maybe we will see some kind of a correction now as well, especially if we consider that for the last 2 months of 2023 have been pretty strong and aggressive. So definitely some pullbacks here could be very healthy. If that would be the case, that would allow dollar to come back up a little bit, and ideally will set up very interesting levels for potential more dollar shorts and more stock longs, maybe going into the end of January and start of February. Now also let's take a look on dollar yen. So as you know, dollar yen has been very volatile for 2023, mostly because of speculation that Bank of Japan could finally change their policy. They still did not do that, but there are increasing odds that this will happen actually in 2024. So with that in mind, with the dollar coming to the downside, with the US yields coming to the downside, I think that Bank of Japan could potentially put more fuel on this fire regarding dollar weakness and potentially pulling dollar yen finally to the downside. So from the Elliot Wave perspective, I'm looking this to be potentially 5 waves up here, with even double top formation here around 151, 152 area. So far we have seen a very strong drop going into the 2024, into the end of 2023. So I think that this makes the first stage for a deeper, at least 3 wave corrective decline. So I'm not sure if that will be new wave for higher degree of, or maybe that's still this kind of a wave 4 correction, maybe even beginning of a higher degree bearish impulse. In either case, I think that there can be room for 130 or so in the first few months of January. So if we see any kind of a rally here in the short term, I think that there can be opportunity within this downtrend. Now let's take a look on Aussie. Now Aussie on a very big scale here. I have been tracking and I have been watching this unfold, this price action actually and these patterns for the last 3 years, if not more. So after each recession, what we have seen is some very nice recovery that was made by 3 waves. That was after dot-com bubble, after Great Recession, and then I'm still waiting on this to unfold since 2022 COVID lows. So that was a very nice strong recovery here, and now we have this pullback which could finally put these bulls back in place. So I'm bullish for Aussie and will be expecting more gains. Now looking also at the price action from the Elliott Wave perspective, here we had this very nice and strong bounce, which in my opinion looks impulsive. Why? Because you just have to compare the personality of this move with this pullback. And notice that pullback has been very overlapping and not that one directional one compared to this bounce that occurred back in 2022. So that's an impulse, and this is then a correction because of a lot of noise. Okay, so this is how we read the price action, trying to understand the difference between impulse and corrections. And what I see here is that actually market could be completing this wave B correction at this 61.8%. I really love the idea how market bounced from that area and then again made only 3 subdivisions, not into a new low. In fact, we stopped at the 78.6. And from there we have seen another bounce, which is now finally breaking this trend line here. Not the minor trend line, because that's a weekly trend line, but still this important trend line that is broken is pointing for me towards 72.30 for 2024. So watch out for more potential upside here. Here's this trend line, maybe even better shown on a daily chart. So that's the breakout. You have potentially 5 waves up. So you would expect maybe a 3-wave setback. If we see this correction, that would be very nice for potential longs from better, deeper levels. If not, of course, there's also a chance that market will continue just straight to the upside. But if you see corrections, I think that there can be opportunities to join the uptrend. Also, whenever looking at Aussie, don't forget on dollar versus Chinese yuan. Chinese yuan, as you know, is very important for Aussie. China is very important for Aussie. China is still not picking up, but I'm sure that China, as they are already repeating, and for the last few months, they will do anything to stimulate their economy. And if they would be successful, of course, this could be very positive for Aussie. So looking at dollar Chinese yuan, well, I think that we have seen some kind of a top here and that we could see more weakness. Why? Because I think that's a wave 1, wave 2 pullback, nice wave 3, and now potential wave 4 consolidation could take place before market moves even lower into this wave A, first leg of a higher degree correction. So watch out for more weakness on dollar Chinese yuan. I think that if we'll see any kind of a rally here back towards 72 area, this could be very nice potential resistance. At the same time, this could be very nice potential support for the Aussie if Aussie would also come to the downside. If not, then this would be even another indication that Aussie is really strong if we're not going to see any kind of a weakness on Aussie, even when the dollar Chinese yuan would come higher. Now let's take a look on Kiwi. Kiwi is also making some very beautiful patterns here. That's a very nice and strong move to the upside, followed by a 3-wave ABC correction that bottom at the lower trend line of this corrective channel. And notice that now we have a pretty nice strong recovery that is already breaking this trend line. So I'm thinking about much more upside here going into 2024, but of course there can be some pullbacks. Okay, now this consolidation here, which comes around 6100 to 6220, that's your first area of the support, especially if we see ABC movement into that area. I think that there can be opportunity on the long side. Okay, so definitely I'm looking for much more upside here on Kiwi after the pullbacks. Now let's take a look also maybe on silver. I will not cover gold because gold, after this failure break to new all-time highs and retracement, I think that gold can be a little bit tricky because this fear of missing out maybe played out. Everyone thought that gold will go straight to the upside. This did not happen. So I think that when gold now came back into the range, a lot of portfolio adjustments, a lot of liquidations occurred. And I think that this could now keep metals maybe in sideways price action, at least gold. But even if gold will move to the upside, I still think that silver will do the same. But maybe silver could have much more upside potential. Also, in general speaking, whenever metals are in an uptrend, silver will try to outperform gold. Okay, so if you are looking for any kind of a more safe haven approaches here, I think the silver is still very constructive here regarding the bullish case. We have a pretty nice strong movement to the upside, followed by this pullback that is very sideways, looks like a triangle. So I'm watching for more gains here going into 2024. I think that there can be $30, $35 could be seen here next year. Okay, of course we have to break firstly some major key levels to make sure that bulls are underway, because we are tracking, by the way, we are tracking this triangle. We have been calling this triangle since start of 2023, and so far is still unfolding very nicely. But what is important for the triangle when it comes to Elliot Wave principle, that you have to understand the substructures of the triangles. So it's an ABCDE pattern, and that's wave A, that's wave B, wave C, wave D. So when prices were here a month back or so, we were warning about the potential resistance because we still do not have this ABCDE legs in place. So now we are tracking wave E, the final leg of this triangle. So very nice support could be around 2150 or so. So if this can provide us some support here and we see a reversal higher after the correction, and then finally we break $26, then I really think that bulls could be back in place. So watch out for maybe 2610, 26 to be broken. But what means broken? Decisive breakout. What is the decisive breakout? Decisive breakout means that you see daily, maybe even better weekly close well beyond that price to make sure that that's the breakout. Just a 1 day of or move in the middle of the day for a few hours up towards 26 and then, or sorry, towards $27, and then immediately you see a close below 2620 or 2610 at the end of the US session. That's not the breakout. That's not decisive. That's not confirmed breakout. So it's important to wait whenever you are watching, observing the potential breakout points, that you wait day or two to make sure that breakout is really happening. Okay, you want to see prices stable above your breakout point to make sure that really we could continue out of the range, because otherwise that's only an intraday noise. Okay, and intraday price action does not count. The most important price is always going to be at the end of the day or at the end of the week, end of the month, end of the quarter. Okay. Now let's take a look also on dollar Mexican peso. Now dollar Mexican peso is in downtrend, and I think it's pretty interesting. Mexican peso in general is pretty interesting because it looks like some kind of a carry trade that worked for the last few years, and I still think that this current downtrend that is in play could continue through the start of 2024. Notice that I am tracking, observing bearish impulse in progress, and there is a wave 5 that is still missing here, because if wave 5 is in play after I think that correction has finished here of a wave 4, then new lows should be seen, and that's still not the case. So I'm watching for more weakness towards 1550, maybe going into 2024. So if we see any kind of a rally in 3 waves back into this resistance area here around 1750, 1780 or so, I think that there can be opportunities on the downside. Okay, and now finally let's take a look also maybe on the euro. So euro dollar, as you know, is recovering. ECB is much more hawkish than the Fed, obviously, and this could keep dollar in uptrend. Also, German US rate differential is very important. If the US yields will be falling much faster compared to the one in Europe, of course this could make a very nice interesting differential, meaning that ratio could move to the upside, and this could have positive impact for the euro dollar. And looking at the wave count itself on the euro dollar, we have a pretty nice wave count I believe. So we have 5 waves up here, followed by this range, which actually was just a noise through 2024. So even if you try to ignore the Elliot Wave principle here, okay, and trying to somehow to focus maybe on this just on a poor price action, okay, what we see here? Well, we see just a sideways price action, right? So what we to make sure, or maybe trying to predict the next potential breakout with higher confidence, what we have to look for where before that range occur, what was going on before that? Well, it was a very strong one directional move, right? So if we respect how the market unfolds, normally in impulsive sequence, you will see a very strong movement and then a range, and then another strong movement and a range. So if we respect this kind of a price activity, then we can expect that the next breakout could be out of this box. Okay, so this box represents a correction. So need to complicate when it comes to Elliot Wave principle. You can always look at the markets for more distance with a more simple approach. Okay, you don't need to label all of the waves, but that's what I personally do to help our clients navigate the markets. Okay, so looking here at the price action from an Elliot Wave perspective, very nice 5 waves up followed by an ABC correction. So that was a flat, and I think that much more upside could be seen here. Of course, again, there can be some pullbacks, then could be some retracements. So this could be first 5 wave movement to the upside that could be potentially looking for a top here now at the end of the year. So watch out for potential pullbacks. If we see pullback in 3 waves, I think that this could be a very interesting opportunity on the long side after these retracements. Okay, also looking at cable, very similar price action. We have these 5 waves up from this September 2022 capitulation low. We turned very bullish back then, and I think that this major low will stay in play, and that will in place, and that we will see much more upside here after this recent correction that in my opinion is completed. So I'm watching for more gains. Definitely at some point I think that this July 2023 highs will be broken out. So trying to look at the short-term structures here. Very nice ongoing impulse is unfolding here in my opinion. That was wave 1, wave 2, nice extended 5 subwaves within wave 3, and now maybe some kind of a flat correction here could unfold in this wave 4 if we consider the rule of alternation. Okay, wave 2 was deep ABC correction, so here maybe this could be an irregular correction now for a wave 4. So very nice supports could be around 126 to 125 area for the start of 2024 on cable. And now finally, let's take a look on crude oil. So crude oil here is, in my opinion, is forming some very tricky subwaves, but we're looking at the monthly chart. Okay, so don't get confused. So what we are looking at the monthly chart? Well, I think that that was a very nice and very strong post-COVID recovery because of demand, obviously. And what we are seeing now is that market is trying to find this fair value regarding the prices here on crude oil. So what I'm seeing is that crude oil is actually in a corrective phase. Now corrections should be made by 3 waves. So I think that correction crude oil is still not finished, and it can be deeper. Even towards $50 per barrel is what I would be looking for going into 2024. I also said earlier that commodities in general are still in this corrective phase. So I think that energies will see more weakness. Also keep in mind on this US crude oil reserves, keep in mind that reserves are very low. So whenever we see price dropping here on crude oil, maybe potentially towards lower prices, I'm sure that US government will be looking to fill their reserves at better, lower prices, and this could cause some stabilization on energies, because as you know, US government obviously is definitely important player here. So whenever we see more weakness here, which I believe will occur, I still think that prices will try to stabilize here around $50 per barrel or so. So looking or going into 2024, I think that crude oil will either stay sideways now for this wave B, maybe it could become a little bit more complex, but generally speaking, I would expect weaker, lower prices on crude oil going into 2024. But whenever this occurs, I think that other countries will try, like US government will try to with filling their reserves, they will try to stabilize the prices. Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you with new charts, with new fresh updates in 2024. All the best that year. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.